Welcome, ladies and gentlemen, to Kings and Queens accounting class. At this time, we are going to be looking at manufacturing accounts. Manufacturing, unlike sole trading business, you have a situation with manufacturing account. We're dealing with the production. We are producing the goods. We're producing goods. Now, there are some businesses that they are providing service, right? And there are some businesses that produce goods. Now, for example, a supermarket, they are buying the goods and they are selling it, buying and selling. They did not produce it, they buy it and then sell it. All right. That kind of accounts we have been looking at since we have begun the course. But now we're going to be looking at those institutions that produce the goods, right? So some business buy the finished goods and then sell it, right? Others make it from scratch, yes, and then they sell it. And that is the difference. Now with manufacturing account, there is a few adjustments and information that makes manufacturing account a little bit different from other sole trading businesses or other retail, should I say, retail businesses. All right, where buy and sell is concerned. You would have noted that in the previous income statement, yes, when we are doing the income statement, we are comparing sales with purchases, because that is an indication that the individual has bought the goods and are reselling it. All right. With manufacturing account, they are bought the raw materials and all those pertaining to the raw materials to create a product, and then they sell it. Now, in dealing with the manufacturing account, there are two main types of costs. Right? Two main types of costs. One, direct costs, and two, indirect costs. Right? These are two main types of costs that we will encounter in dealing with manufacturing account. Now, why is it that they call it direct costs? The idea is that those material or those items that are directly and traceable to the finished good is referred to as direct costs. So direct costs is all the items or input. Yes, the input that can be traced to the finished goods. All right. So that's why it's referred to as direct costs. Now, there are three elements that include in direct costs. And by the way, our direct cost is also the same as our prime costs, right? So direct costs and prime costs are the same. Now, I want to point out here with manufacturing account, what the accountant seeks to do is to allocate costs based on their respective cost units. All right, you are allocating costs based on the cost unit. All right, so prime cost is the same thing as direct costs, and there are three items that it includes it. One has to do with raw material. And when we speak of raw material now, for example, we are producing, I like to use the bakery. So you're producing bread, all right, or cake. So the raw materials would be all of those ingredients that you are going to buy to mix together to make the dough for the bread. So it is referred to as a direct material. Secondly is what is referred to as direct labor. Now, direct labor really relates to those individuals who will be critical in the production of that particular good or product. So if we go back to our bakery idea, yes, while the flour, the sugar, and all the other material that you mix together to give it the dough would be the raw material, then the labor costs would be really those persons who are baking, yes, who are baking the product. So the bakers would be the labor. Now, I want to go a little bit further in relation to labor to indicate that sometimes it is referred to as the labor cost, direct labor cost referred to as factory wages. It is also referred to as manufacturing wages. Right? So you will see them indicated as factory wages, manufacturing wages, and it is also may be seen as production wages. So these are this likely, what should I say, classification of direct labor. So direct labor really refers to the wage that is paid to those individuals who are directly related to the production of the goods. The third element of direct costs is what is called direct expenses. Now, direct expense may be not a frequent occurrence, yes, in manufacturing, but it does occur. And it may be, for example, your direct expense may be your trade fees. It may be your copyright fee. It may be your royalty fee. All right, these are examples, or license fee. But why is this referred to as a direct cost? Let me speak to this, the last of the three. Royalty, for example, the fast food industry, many of them are franchises. Many of them are franchises, such as KFC, Burger King, McDonald's, etc. All these are referred to as franchise businesses. And what happens is that the franchise holder, yes, sell the right to the production of the product to another individual referred to as a franchisee. The franchisee is getting an opportunity, yes, to produce goods that he or she did not create originally. He simply gets the formula and all that pertains to what the franchisor, right, or the person who owns the right to it, is getting that well worked out and prepared. And that is why when you go to most KFC enterprises, they all look the same, have the same color, the same arrangement and so on, because the franchisor has sold to the franchisee, yes, has sold to the franchisee the right to produce the goods. So that right to produce that particular good that they have created, they have to pay a fee called a royalty fee. All right. In some cases, it is a copyright fee. All right. You want to produce, maybe, let us say, take Bob Marley for example, and you want to use a dub from Bob Marley to produce something, to do another music. Then you have to pay them copyright fee in order to use that to produce another item. So these are directly related to the production of the good that is there, or the product. So that is why we have direct expense. So we have direct material, direct labor, and direct labor really refers to the wages that is paid to those persons who are directly interfacing with the product, the production of the product, and direct expenses. These are the three elements that are added together to give us either what we refer to as a prime cost or our direct cost. Now, I'm going to go on a little bit further now to share. So now the first part of the manufacturing account is really to find the prime cost. The first section of the manufacturing account is to find the prime cost. All right. Now, after we have found the prime cost, we come to the indirect cost now. All right. The indirect cost is sometimes is really what we refer to as our factory overhead. Factory overhead expense. All right. Now, these are costs that are incurred, or they occur as a result of the fact that you are really operating, you are doing the production, operating the business, or you're doing the production. For example, because let's go back to our bakery idea. Okay? Now, because you are doing you are baking these products, there are some costs. For example, one, you have what is called factory power. That has to do with the lighting, or they sometimes called lighting. That is the source of electricity that is going to be running, that are your generating power generating system that you're going to be using to power the machines or all of those equipment, yes, to produce the goods. So as a result of you doing the business, this cost is incurred in the manufacturing. Rent. If you did not do the business, you would not rent the place. So it's a result of the fact that you have rented the place to do the business, you are intended to do the business, that the rent cost comes in. So rent, and sometimes I want to say quickly, there is an allocation. So if the building that you have, you are doing manufacturing and you are doing retailing at the same time, right? In the same complex, then you will find in many of the questions that they have some allocation of the cost. They may say 60% of the rent is allocated to the manufacturing side, and 40% of the rent is allocated to the retailing, or they call it general expense. All right. So there's they would say this is for factory and this is for office. Let me use the other word, factory and office. Right. The whole idea of allocating the cost, and I said earlier that in manufacturing you're allocating cost to their cost units. Let me go on quickly. So we're dealing with indirect costs, and so those costs that is incurred, right, in the process of doing the production. I want to go a little further to identify, for example, cleaning, factory cleaning, or factory cleaning. As a result of the fact that you're operating the business, yes, you are going to need to be clean. So you're going to pay somebody to pay the factory cleaners. All right. They are not directly related to the production of the bread or the bun or the cake. Yes, but they contribute to the upkeep and operation of the place. If the place is not sanitized, then that will create a problem. So are not clean. So their work is involved in the manufacturing process, but they are not directly related. They are not manipulating the raw material to make the good. Okay? I want to move on to share as well another factory overhead or indirect cost. And that has to do with depreciation, a very important point, because many times this is misunderstood. Now, depreciation is done on fixed assets, all right? Any fixed asset that is in the business. However, when it comes to manufacturing account, the assets that are allocated to the manufacturing account will be those that are used within the manufacturing business. So for example, you will have depreciation of plant and machinery, right? This would be going to the manufacturing account because that is where it is being used. However, if you have a retail side of the business and you have what is referred to as a delivery van, then the depreciation for delivery van would not go to the manufacturing account, but rather it go to your regular income statement. Yes, regular expense. As a matter of fact, this would be under what is section referred to as the selling and distribution heading of the expenses. All right, the depreciation of this. You may also, they might say the manager is driving a car, the manager's car that is driving for work. Right? This car would not be, the depreciation on the car would not fall under manufacturing or indirect costs, but rather it will be in the regular income statement under what is referred to as the administrative costs. All right? So while this would go to selling and distribution, this will go to admin, and this would go to factory. All right. I wanted to point that out, very important, because whenever the situation arises, whether in a question for examination or at work, you need to be able to know that there's a clear distinction as to where you allocate your depreciation in the matter of manufacturing accounting. All right. So we would have indicated to you, this is the second part of the manufacturing account, the indirect costs. And we give examples here. I wish now to say there is a third element to the manufacturing account. A third element. So having spoken about direct costs, indirect costs, there's a third element that is considered, and it is referred to as your work in progress. An adjustment for work in progress is done in the manufacturing account. So let us go again. First, we deal with what now? Direct costs, or what is referred to as prime costs. And 2, then we go to what now? Indirect cost. And thirdly, we address work in progress. Now let me discuss this now. Work in progress in manufacturing is an item where the manufacturer is taking into account the proportion of the goods that was completed. Yes? So at the end of the year, they're coming down to the end of the year. And as they are coming down to the end of the year, right? Or when the year ends, they might have started working on a particular product, but that product was partly finished. Yes? So they are factoring the proportion of that product that is finished as a part of the consideration of a cost. Right? They have spent that money within that particular financial period to do that portion of the work. Example, in a furniture store or furniture manufacturing business, and they are preparing the tables, and the fact that they have made the legs of the tables, the top for the tables, but they have not yet fitted it together. They would now evaluate the cost. Yes, how much did it cost them to make the table, the legs for the table and the top for the table? And that was done within the financial period. And because it was done in the financial period, they are going to charge that cost to the manufacturing account. So when you go over to the other period now, the other section of that very same product will be considered because it is being done in another year, another period. So we have work in progress. So I want to say again, we start with what now? The direct cost, then the indirect cost, then we adjust work in progress. Now what is done is that the opening work in progress is added and the closing is subtracted. All right? So you add the opening one and close and subtract the closing. Now, one last thing before we get to the exercise, and that is work in progress is also considered to be a stock or an inventory. So there are three types of inventory when you come to manufacturing: work in progress, raw material, and we also have finished goods. Three types of stock that exists in manufacturing businesses: the work in progress, the raw material, and the finished goods. So when we come to the time when we are looking at the balance sheet, you'll find that when we come to do the inventory section, we're listing 3 sets of stock items. All right. Now that we have considered those preliminary information, we must now show to you how do we draft the manufacturing account. And we're going to use this question, yes, to show how we draft the manufacturing account. So let's roll up, please. So now that we have ruled the manufacturing account, we are going to be applying this information from here to the manufacturing account. The first segment, again, of the manufacturing account is the section that deals with direct material, direct cost or prime cost. First set of items that will go in the manufacturing account are your raw materials. So what you do is that you go to the question and look for all the items relating to raw materials. You are addressing that which is raw. I often say you address which is raw and then you address what is cooked. So you address the raw material. So the opening stock of raw material is going to be in first. So we record opening raw material. Opening raw materials. And the figure here for raw material is 2,400. Then we're going to deal with our purchases now of raw material. So we started the period with this set of raw material. We purchase some new stock. Purchases of raw material. Yes, and that is 340. Matter of fact, we're going to do a slight change and put it right here instead, because we're going to do an adjustment. So we're going to add the carriage on purchase of raw material. And that is what we have here. Carriage on purchase for raw material is 321. So we're going to add those. When we add it, we're getting, yes, 21, 6, 6, 1. Our next move is to add the old material with the new ones. And 1, 6, yes, that's 10. That's 3, 4, and that's 2. Right? 24,061. At the end of the period, we have left some raw material right here, which is 2620. So we're going to list that. Closing raw material. And that is 2620. Okay, so we're going to be subtracting that now. And this is going to be 4, this is going to be 4, 3, this is going to be 1, and this is going to be 2. All right, so this figure now is referred to as our cost of raw material consumed. Okay, that's this figure. All right, so we would have completed the first element of the manufacturing account. Remember, we have in the element of the manufacturing account, we have raw material, and then we have labor, direct labor, and then we have expense. These are the 3 elements. So we have dealt with the raw material. As I said before, we do this first, then we go to do with the labor now. In the question, it tells us that we have manufacturing wages, so we're going to be using it now. All right, and that figure is 13,280, right? And we're told as well that we have some manufacturing expense, some direct manufacturing expense there. So we have manufacturing expense. And they indicate that it is direct. And that is 1450 rather. So what we're going to do now, we're going to add the 3 elements: material, raw material, labor, and expense. That is 12 12 plus 5 is 17. Yes, 17, that is 10, 11, and that is 5 and 1, 6, and this become 3. Yes, okay. So this figure is referred to as our prime cost. So this figure, so we have found the prime cost. So we have completed the first segment in relation to direct cost. So all of these elements refer to the direct cost. All right. So we're going to the next segment referred to as now the indirect cost. And we say we refer to it as well as factory overhead expense. All the other items relating to the factory, all the other items are costs relating to the factory are listed here. From the question, going from the top down, we would have seen factory power. So we go, let me underline this, that's the heading. Factory power. And factory power is 6220. We would have factory rent, and factory rent is 2,300, and we also have depreciation on machine. You would have recalled earlier when I spoke to this matter that the only one we're going to use of the two depreciation mentioned, we have depreciation for machine and depreciation for delivery van. The one that is going to be used in the manufacturing account is this depreciation for machine, which is 1,200. And that is 1, 2. So I think that's what would have covered all the indirect. So we're going to add them. And the total here would give us, let's go do the maths now. 0, 2, 5 plus 2, 7, 6 and 3, 9. So the total factor overhead is 9,720. We're going to add this to this to give us total. This is going to be 1, that's going to be 9, and this is going to be 8. So it's 8 here, that is going to be